If I was him, if I hated what you're doing and you got $5 million and your wife is working full time making 200, see you later.
I wouldn't do that at the spending level, me personally. To me, that's too rich of a distribution rate at age 56.
We got little Barney and Betty from Northwest New Jersey. Goes, hey, Andy, Big Al, Joe. I'm a big fan of the show and greatly appreciate the combination of sound financial information and humor. Personally, I don't think Joe's sarcastic enough.
Really?
Wow. Should listen to the show a couple of years ago.
Wow. Okay.
Try to tone down. You get all hopped up on Celsius, and you got to deal with life.
You've toned down a little bit.
This is my outlet.
I think once you started, you had family, kids, I think you toned down a bit.
Well, so I'm coming back hotter than ever. We should really lay into this letter. All right, I'll lay into you. I can take it. All right, I'm currently 56. My wife's 57. I recently switched from full-time to part-time work. I'd like Joe and Big Al to spitball for me the earliest that I can quit the part-time work and fully retire. All right, here we go, Barney. For retirement savings, currently have about $3 million in. Okay, that's enough. You're good. You're done. Oh, I don't know. Get out of retire. By the way, I got like $20 million. Please call me Barney and Betty because I don't want anyone to know I'm super loaded.
Sounds like you're ripping on him.
No.
He can take it.
She said he could take it. All right, $3 million in a pre-tax 403b, $450,000 in 457 accounts, $150,000 in a Roth IRA. Oh, $1.2 million in a taxable brokerage account. $13,000 in HSA. Oh, we have $1.3 million in home equity. Come on, dude. I make $315,000 per year for my part-time work.
Part-time,
oh, woe is me.
$315,000.
Oh my God. Poor you. Part-time, 300 grand. Most people don't make that in a lifetime, Barney. My wife works full-time and makes $250,000 a year. All right, I contribute about $30,000 a year to my pre-tax 403b, 22 into the 457, $8,000 per year in the backdoor Roth. My employer contributes $40,000 per year into the 403b, total $100,000 per year. This will obviously stop when I fully retire. My wife contributes $30,000 per year to her pre-tax 403b, $8,000 to the backdoor, $8,000 to her HSA. Her employer contributes $23,000 per year into the pre-tax 403b, total $69,000 per year. All right. My 3 kids will all be off to college in 5 years. Their college is completely funded by the 529 plans. Oh my, it just gets worse and worse for this guy.
Another one.
I mean,
okay.
yeah. In 5 years, we'll sell our current home, buy a smaller house or a condo, and net about $300,000 in profit.
Let's add that to the total.
In terms of expenses, I spend $5,000 a month. Okay, what is this? In terms of expenses, my portion of the household expenses is currently $22,000 per month. This will decrease to $17,000 per month in 5 years when we downsize and have an empty nest. I currently draw $60,000 per year out of my brokerage account to cover the difference between my income and expenses. This difference will eventually be covered by the $300,000 profit from the sale of the house. My wife will work until age 67, at which point our combined Social Security benefits will 100% replace her income. Thus, I think we can keep my wife's income, her portion of the household expenses, and our Social Security benefits out of the analysis.
Okay.
I've not heard anything bad yet. Not even close. Okay, I like Kentucky bourbon with a little large round ice cube.
Why has that become so popular?
Yeah, I'm not a big ice cube guy.
You're not.
No, I like the rocks. I'm here to tell you, the big ice cube just, I don't know, doesn't do it for me.
I want to chew ice. The big ice
Yeah,
cube
me
doesn't.
too.
You can't do
I'm
that.
an ice chewer too.
Yeah.
I like to. What is that? What is that? Just
It probably means we're OCD or something. I don't know.
yeah.
That's
Because look at my pen. I chew on my pen. I chew on ice. All right. So the wife, she likes a little New Zealand Sauvignon Blanc. I drive a 2021 Honda CRV. My wife drives a 2024 Hyundai Telluride. We have no pets. Do you agree with maxing my contributions to my retirement accounts, even though this means taking some money out of the brokerage accounts? I would like to retire as soon as possible and have several hobbies to occupy my time. My wife loves her job, so she's fine working until 67, 70, until while I enjoy
Wow.
what total do the retirement savings need to reach for me to retire? At what age do we switch from 3% to 4% in terms of a safely yearly withdrawal rate on the retirement savings? Or should I just use 3.5%? Thanks for your spitball. Okay, there's a ton of assets here, ton of income, a ton of savings. Can
So-
he retire and do some cool stuff as soon as possible?
Yeah, so he's starting with 5 million, Joe. And the only problem is the spending. So 22 grand a month, if you run that over the course of the year, I just divided that into 3%, just at age 56, I think he said he was. Well, that was one of his questions. When to use 3.5, 4? I personally use 3% around 50, 55, 3.5 at 60, 4% at 65. It's not a hard and fast rule. It just gives us a ballpark idea. If you take 22 grand divided by 3%, you're going to need about 7.9 million, and you got 5. So, but in 5 years, when your spending is 17, I think that's no problem. So you could retire right now if you saved a little bit on spending. Otherwise, you got to grow the portfolio a little bit for that kind of spending. But again, assuming that the spending is less later.
I got 8.8 million now.
8.8.
Mm-hmm.
Okay, 22,000 times 12
Uh-huh.
divided by 3%.
Yeah. 0.03 divide 8.8 million.
You did. Okay.
Yeah.
I got 7.9.
It's the battle of the calculators on YMYW.
I got a little. What do you have? You're using your phone. I got an HP 12C here.
It's a HP app.
So, but what I'm confused about here, so in terms of expenses, my portion of the household expenses is currently $22,000 a month. So did you get 8.8, bud?
I did.
So it's
I must have done it too fast.
so $260,000 a year is his portion of the expenses.
That's what he's saying. He's saying, let's keep the wife's out of there. She's covering her side, and her income isn't going to change because she retires and Social Security takes over.
Okay, and then so Barney makes $300,000 a year,
Yeah.
right?
Yeah.
What's his
Three-
income?
Yeah, 315.
Okay, so he needs 260 after tax. He's making 300. So with his savings that's going into the 403B and the 457 plan, he's taking money out of the brokerage account and he's funding those accounts. So I don't know if that makes a ton of sense because he's going to have a ton of money in retirement accounts, and they want to spend high dollar in retirement. His wife makes $200,000 a year, and she's going to continue to work until age 67. So he's taking money from a brokerage account that's going to be taxed at a capital gains rate. He's taking the money and he's putting it into a retirement account. He's getting a tax deduction today, but then the money grows tax deferred, but he's going to have to pay taxes on those dollars at a later date. So I think the math is, all right, well, what tax bracket are you in today? What tax bracket do you think you're going to be in the future? It sounds like he's relatively going to be in the same tax bracket because a ton of the money that they're saving in all of this match is going into a qualified plan. So all dollars that are coming out is going to be taxed at ordinary income rates. So I don't know if that makes, I would have, of course, to get my HP 12C a little bit more exercise here, but I don't know if that makes sense unless if I'm going to take money from a non-qualified account and put it into a brokerage account to reduce my taxable income, I would do conversions and keep my taxes the same versus what he's currently doing. So
Yeah,
I don't know if I like that move at all.
I'm with you there because he's already got 3.5 million or 3 million in retirement accounts. He's adding to it. He's still young. I mean, that thing could double twice. I mean, can you imagine what the RMD is going to be in the future? So I don't really, the only reason I would take money out of the non-qualified account and put it into retirement if I was doing Roth, just like you said, because then I'd like more tax-free. But yeah, agree with you there. So I did a little fat finger on my calculator. So 8.8 million is the correct answer. Now, if you use 3.5%, again, this is just to give you in the ballpark. Even if you use a 3.5% distribution rate right now, you need 7.5 million. You got 5, so you can't really retire right now at this spending level. But as you say, your spending goes down $5,000 per month in 5 years. Then it starts to look pretty good, right? So now you can, I think you can make that. So yeah, I think you will be on
I
track.
think he's really, really close, to be honest with you, because there's a lot of calculations that he needs to do. So if let's say he retires as soon as possible tomorrow, you retire tomorrow, you're going to have a large distribution rate, $264,000 into 5 million, right? Is 5.3%. It's not awful. Right? It's so you take 5.3% out of the overall account for the next several years, and then it's going to be a little bit less because your spending is going to go down, right? Depending on what the portfolio does. What will kill him is the sequence of return risk. So if he retires today and takes 5.5% out because that money needs to last quite some time, but there's all sorts of things that he could do to say, all right, well, here, I'm going to spend $265,000 a year for the next, let's say 15, 20 years. And then I'm going to tone that thing way down because I'm not going to be doing the hobbies. I'm not going to be traveling. I'm not going to have membership of the country club or whatever the case may be. So, people spend a little bit higher in their first 10 to 15 years, and then they kind of slow things down, and then they spend a little bit less, but then there could be healthcare costs. So I think he's super close here.
Yes.
If I was him, if I hated what you're doing and you got $5 million and your wife is working full time making 200, see you later.
I wouldn't do that at the spending level, me personally. To me, that's too rich of a distribution rate at age 56. But
5%?
More than 5.
But he's going to get Social Security. He's going to tone down his savings in a couple of years. His
Yeah.
wife is working full time.
I mean, so
250.
here's the problem with this kind of question is we really need financial software to plug all this in because there's a lot of variables. So we're just giving you a quick answer based upon what's in front of us. And in my case, my phone. In Joe's case is HP.
Yeah.
And this is why it's called the Spitball.
This is a big wad. Football here, for sure.
Anyway, I wouldn't retire just yet. Also, I'm just thinking about you still have kids that are at home.
But the kids are, yeah, I suppose, but the college is paid for.
I get that, but then it's like, all right, I don't know. I'd let the kids get through high school at least. That's kind of how I would think about it.
If you can be flexible in your spending, if it's a hard, fast, 270 plus a cola, yeah, it's super tight. But in down markets or things, if most people spend a little bit more some years, a little bit less the other years, it's variable. That's why you have to be looking at this constantly, and it's a process. It's not here's a spitball when you're 57 years old, and then you're gonna come back 15 years from now when your $5 million portfolio is 2.5 and coming blazing.
Wait a minute, Joe. You said it was okay.
Hey, yeah, where's that Anderson punk? He said I was all right. That sarcastic a-hole. All right.
On the other hand, $5 million is a lot of money. So you can definitely retire tomorrow. You just have to probably make a couple changes.